URA has released the latest statistics for the last quarter and prices are up once again. Let's talk about this today. Hey everyone, welcome back to the channel. I'm currently still recovering from my surgery and I'm doing this video right before I fly so that I am able to keep up with my weekly posting. And at the time of recording this, right, I'm supposed to bring my son for go-kart and he's texting my wife to say that still don't know when, and yeah, you can super for them to see. It's really quite hilarious. So this is going to be a quick one. I basically read this even before the newspaper has a report on this so that you don't have to. I'll be sharing with you what are some options you can consider with a huge chunk of launches happening in the next couple of months. Now, if you appreciate unfiltered comments just like what you received earlier on, do me a favor by liking this video because it's going to help me a great deal. It's absolutely free. Thank you. Now, the first part of the report talks about the headline price trends in Q1 2025. The overall private residential price index increased by 0.8% in the first quarter of 2025. Now, while there's an increase, it's at a slower pace as compared to 2.3% increase we saw in the previous quarter, which is Q4 2024, which means that the acceleration has moderated slightly. And if you ask me, the ground, right, we all know why, because back then there was this Chun Park and also Emerald of Katong and all other launches that caused the RCR actually raised the overall price index because of the huge chunk of launches in the RCR region. The moderation in terms of the price increase, right, may not be a very clear indicator of price growth, and that is purely my own opinion. Now let's talk about the non-landed market by region itself. In the core central region, CCR, prices increased by 0.8% in Q1 2025, slowing down from the 2.6% increase in Q4 2024. Some people always say that
CCR very hard to make money, sure lose money. Nobody want to stay in the CCR.
But the overall year 2024, we still saw prices going up by 4.3%. Try your best to avoid blanket statement like
this place cannot buy, that place cannot buy, because
it's really down to what kind of entry price we're looking at and the value of the property itself. Now in the RCR region, we saw prices increase by 1.7% in Q1 2025. This is also slower than the 3% increase in Q4. And the explanation is very simple. Q4, as I mentioned earlier, there were a lot of launches as compared to Q3 2024. That's why the price increase was higher. Simple as that. However, OCR still the clear winner for growth in the entire year of 2024, and even in Q1 2025, it still has the highest quarterly growth amongst the non-landed region, partly also attributed to the launch of the URA and other launches in Q1, and the strong take-up rate in the RCR region after the projects like Elta, Parktown, and also Chun Park has pushed the new OCR prices to make the RCR price look super cheap. Now, coming to my own personal favorite, the OCR region saw the most significant slowdown. Prices have increased by just 0.3%, almost like never make money, right? In Q1 2025, a big drop from 3.3% increase in Q4 2024. This aligns with the observation that OCR growth has slowed down significantly in 2024 compared to 2023. But maybe you need to think again. 2024, there was Chun Park. OCR trade $2,600, $2,700 per square foot. You see OCR prices like Lentor Central Residences, Parktown. Maybe the price comparison may not be the most relevant. However, it is what it is. OCR has experienced slower growth as compared to the previous quarter. Now, if you have yet to subscribe to this channel, please do so right now because we post weekly real estate videos like this, and these will help you make more well-informed decisions. Now, for those who are looking to upgrade to a landed property, you'll be happy to hear that price increased by 0.4% in Q1 2025, which is a turnaround for the 0.1% decrease in Q4 2024. Why do I say that you'll be in for a treat? The truth is that when the prices of landed properties does not go up, right, there will not be more people looking to sell the property because landed properties that are acquired 3 years ago, which they are ready to sell now or even earlier, right, they acquire the properties like 20 to 30%, even up to 40% cheaper than what it is today. So when the property prices don't go up marginally, right, there's no motivation for them to want to exit, which is also a piece of good news for the landed sellers as well. Time to list your property again. So some people will say that I'm crazy, but as a practitioner helping my client look for property and a property investor like myself also buying landed properties, I would think that you must see a little bit of growth in order to have more supply, which means more options for the buyers in the market as well. And it may sound unorthodox to you, but as somebody that is buying landed property, I think it makes sense to me. Next, let's talk about the developer sales and EC market. Looking at the developer sales activity, they launched 3,139 uncompleted private residential unit excluding EC for sale in quarter 2025 and sold 3,375 units. This is a strong start because it's already half of the total 6,469 units sold in the whole of 2024. Projects like Parktown, Lentor Central, the Elta, the URA were specifically mentioned in the statistics as has been very well received. Developers has also launched 760 EC units and sold 830 EC units since quarter 2025. So more units sold than launched. Long story short, the market is hot. As for the number of subsale transactions, there were also 3,565 resale transactions in quarter 1 2025, making up 49.1% of all sales transactions. Subsales accounted for only 4.4% of transactions with 321 units. And if you have been following the news, right, there's this article that shows a lot of subsale transactions that were not profitable, and in fact the subsale profits actually dropped. So if you wish to get my comments, right, comment subsale inside the comment section, and if there are enough requests, right, I'll do a video specifically to advise on subsale, on whether should you be selling during the subsale or buying a subsale unit. And this part is a little bit interesting because historically, based on the last few years, especially after COVID, in the resale market, right, out of every 2 transactions done in the resale market, there's only 1 new launch transaction. But in quarter 1 alone, this is not in the report, it's basically my own finding, the number of transactions in the new launch and the resale market is actually on par, similar to Q4 itself. And if you ask me, it's because of the closing gap between the resale and the new launch pricing. Most of the time when people see that when the resale and the new launch is almost about the same price, right, they will think that the new launch is a better buy. So future supply and GLS insight basically is nothing special. It just basically say that there are actually more GLS in the market, 5,030 units including 980 EC units, about 60% higher than the confirmed list supply from 2021 to 2023. And I'll link the description below. You can go check it out. But basically it means that there are more GLS, and because of that, right, developers with lesser land bank, they'll be looking to bid more aggressively, resulting into higher land prices. And what they didn't say over here is also in the increase in construction costs, all thanks to the trade war, the Liberation Day, where Donald Trump increased tariffs on almost everything you can think of. So as for the GDP, this is going to be the boring part, so I will let you go and read on your own. In terms of the economic outlook and interest rate uncertainty, we've repeated over and over again, and many other agents have done the video, so you can go check out other videos, or I'll link them in the description. You can read for yourself. Now, in order not to make this video too long, I've done a separate video that will be posted next week, so do remember to subscribe to this channel, or if you need a quick answer, right, here's my number, feel free to drop me a message. But in a nutshell, I always fall back to my 3 golden principles: start saving and invest as early as you can, constantly increase your asset net worth by upgrading to the next asset class, and try your best to have 18 months of reserve funds or a 20% buffer for your usable capital to tide through difficult times. Now, as promised, here are the new launches that are happening in the next couple of months and a brief intro of what I think about this project. So there's this upper house at Orchard Road, which is at Orchard Boulevard, 300 over units. Robertson at Opus, which was the previous Robertson Quay, converted into a mixed-use development with total 348 units, 999-year leasehold for those who are freehold junkies. And out of all these, right, my personal favorite will be River Green because it is in the CCR region and the MRT connects you to the Great World City, offering you a kind of connectivity that not many projects in the District 9 currently offers. And not only that, because we are having very strong price support from the launches coming in the RCR region right across the road, which brings me to the RCR region. There's Arena East launching very soon, freehold 107 units. There's Linden Woods that's launching very soon as well, 343 units. This is a launch that is based on change of use, so do not be mistaken, this is a non-harmonized project, so hence you need to compare the PSF correctly. There's also the Sand, which is at the Souza, my favorite area, the Upper Bukit Timah area right beside Verdale. Total number of units 347 units. There's Zion Road Parcel A, which is the one that is being zoned because it will be launched almost at the same time as Parcel B, which earlier on we mentioned these were actually launched close to the region of $3,000 per square foot, which will form a logical safety net for those that are looking to buy into the CCR region. Some of you didn't know that area is actually the RCR area, just like One Marina Gardens. So in the RCR region, my personal favorite will likely be Margaret Drive. Why? Because even though it is not inside the list because the launch is still unknown yet, that is something that you might want to look out for because it's surrounded by all the $1 million HDB. But that's a whole new topic altogether because the $1 million HDBs these days during the MOP, you are also subject to the ruling of prime location housing. So that's an altogether different topic. But yeah, that's something that I think is an interesting location. However, launch date is still unknown. So coming to the OCR region, Springleaf 941 units, previewing is August 2nd, and also Canberra Crescent residences. Likewise, 2nd of August, if you need some comments or you need, I was situated there at the launches, do feel free to give me a call. Happy to assist you on that as well. There's also Faber residences, which interestingly, the GLS wasn't done very long ago. However, it's slated to launch end of this year. I'm guessing because it's actually a low-rise development, therefore it's much easier to obtain your building plan and approvals. So if you think you want more information about this development, feel free to reach out to me, or I've listed more information. I'll link them in the description. You can go check it out and understand a little bit more for yourself. But do be mindful, even though we mentioned which are my favorites and whatnot, it still boils down to the entry price, because until the day of launch, nobody will know the actual pricing until the day of launch itself. So in summary, the market in Q1 2025 saw prices continue to rise, even though at a slower rate than the strong finish to 2024. Rental has saw a slight rebound. Developer sales for new units started the year very strongly. However, while economy uncertainties and high interest rate remains factors, demand seems robust, supported by rising net worth and the market's acceptance to new price levels. And before you think that I'm saying just go and buy, I will advise that be careful. If you have a budget of 2.5 million, I will think that maybe if possible you can cut back by maybe a 5 to 10% to leave behind a bit more buffer over there. Why? Because nobody can guarantee you will not lose your job. So just by anyhow buying just because the market is going up could result to forced sales, and the only reason why people are selling without profits is because to the minority group of people who lost their job, didn't have a buffer and have to sell even at a loss. So whether you are a first time buyer, HDB upgrader or a condo upgrader, right, the key is to stay well informed. And in order to stay well informed, go check out my other videos to learn more so that you make well informed decisions. Thanks for watching to the end. All the best to your property purchases, and I'll see you at my next week's video.